activity that's happened, some trading updates that's happened, some things I want to be talking about and discussing with you guys. Um, so um, you know, it's just so much has happened in the last I mean, from Friday to today. We had literally on hold on a second, let me bring this up. I actually sent this to a buddy of mine, but on Friday, here, let me. Yeah, I'll just slide it over. On Friday, we had after causing the worst day in the stock market since April, President Trump says, "Don't worry about China; it'll all be fine." Highly respected President Xi, which is insane. Insane that he used that because he didn't say that at all over the last few months. Just had a bad moment. He doesn't want a depression for his country, and neither do I. The USA wants to help China, not hurt it. DJT. So, who knows what's going on? We got a lot of updates that we're going to get into. We're going to talk a little bit about debt in the United States because this is a very important issue, I'll say. All right. We're going to talk a little bit about debt that's going on and the debt bubble and what's being sold and stuff like that. And so it is It is notwithstanding, we have a whole lot that we're going to be discussing. But now, before I begin, I got to let you know. Before I know, I got to let you know that I am, let's see. Daryl, Daryl, I'm going to share your comment. I hope you don't mind. He said, "Hey man, you were right. His tweets override seasonality." Yes, sir, they do. They really, really do. That is the comment of the week right there. And it's only Sunday. I appreciate that. Now, really quickly, guys, I'm not today I'm not acting in my capacity as a commodity trading advisor or a licensed financial professional. I'm simply here showing you opportunities. What you do with that as opportunities is all up to you, as well as you got to be aware of any and all risk, understand those risks, be willing to accept those risks, take on those risks. And if you decide to take any trades that I'm showing here today, just know you are doing so of and on your own volition. Now, for any of our newer folks that have jumped in for the first time with us, I've been in trading education for 15, 16 years now. I'm a licensed financial professional as well. I am the founder of a managed fund where we do individual asset management for people. And that has gone just absolutely amazingly. I also have a retirement estate planning company where I help people retire tax-free, take advantage of massive, massive opportunities. That's actually one of the things that I'll discuss a little bit here today is that I don't know if you guys saw, but over the weekend, it is now 100% improved that from the one big beautiful bill that your capital gains taxes are going up. Let me repeat that. From the one big beautiful bill, okay, you will be taxes are going up. We'll talk a little bit about how you can offset that and how things that you can do for that. Absolutely, Deborah. Not by much. It's not a ton, it's not gone up much, but it's still going up, right? And let's see. William said, "I'm sorry, this is my first time. What's your website, futures?" William, here's the crazy thing. Okay. So in this presentation, I don't really like give out any like websites and tools and things like that. I'm not selling anything here tonight. I will invite you to some webinars and I'll send out some links here just in just a second, but with some newsletters and things like that. But mostly what this is about is giving you guys information and trade setups and trades in all markets. I've worked in all asset classes. And I am I love trading. I love investing. And I'm doing this because this is what I do every Sunday myself. So I was like, why not just like talk to people while I'm doing it? So I'm not bored of myself. Really quickly, a couple of housekeeping items, Discord and special sessions. As you guys know, Join the Discord. My man Stu is back at it again. Close applied earnings for a 333% return. That is amazing. And he's sharing those trades out as well as other things. So I'm going to send this out to you. There is the link to the Discord. Feel free to join the channel. It's absolutely free, will cost you nothing, will never ever cost you anything. And I am doing this because I want to definitely share, as much things as I can with you. And anybody out there, join in on the channel, get locked in, and chat on there, like communicate with each other, with myself. I'm here to help in any days, and I'd love to do that. So, that's amazing, Jerry. That's amazing. And was that Forex? Because I know Forex JPY has moved a lot because people are looking for safe havens, but there could be some things up with Japan, and we'll talk a little bit about that here tonight as well. Special sessions. We have a few things coming up this week. So the first one I actually want to do is this one. This is going to be mine. This is on October 20th. And I'm going to just send you guys the meeting link. This is the meeting link to a webinar that's going to be on the 20th that I'm hosting. This will talk a little bit more about the tax-free retirement stuff and all of that. And I'll send that out on Discord as well for you guys. But a couple other things that are going on here. On Monday, I believe, Monday, Tuesday, let me see here. We have October 14th. Yeah, October 14th, I'm going to be hosting a webinar, and I'll send you guys that link right now. This is on using Hedge Fund Trender, which I use in the webinars. You guys will see it, as well as I'm going to give you guys the Fib Mastery sign up as well. This is a great sign up by Tyson Clayton, and I'll send you guys that. So feel free to use that stuff. That'll be I'll try to send it out one other time here today as well. But mostly, I want you guys to join the Discord and, be participative in this session. Ask questions as we go through things. Why did that not copy? There's the Discord as well, for you as well. So let's get into a couple other things really quickly on this. This week's fundamental news announcements, as you guys know, 10-6 to who knows when. We got the government shutdown happening. And we're supposed to have Jerome Powell speaking on Tuesday. I don't know if Jerome Powell is speaking on Tuesday. We're supposed to have PPI numbers come out. I don't know if we're going to get those numbers come out, right? This is all going to be affected by the government shutdown. What numbers come out are the numbers that come out. We will see what happens, kind of deal. All right. That just is what it is. Okay. Ryan said market energy one. Ryan, I don't have that one with me, but I do use market energy in here, and if I get it, I will definitely send it to you as well. Oh, and then Hubert's actually going to be having a webinar as well. Hubert's going to be having a webinar as well. There's that one for you guys as well. I almost missed that link, but so we don't know, fundamental news government base wise, but what we do have are earnings, and we have a lot of earnings coming out this week. So I'm have it all up here, and I'll let you guys screenshot it if you want to. But on October 14th, we have JP Morgan, Johnson & Johnson, Citigroup, Goldman Sachs, Wells Fargo, and BlackRock all reporting earnings. Then the very next day, we have Bank of America, Morgan Stanley, Abbott Labs, United Airlines. I forgot to type in the airlines part of it. They are reporting. Then we have American Airlines, Schwab. Then on the 16th, we also have Taiwan Semiconductor, and then American Express. Yeah, banking sector really leading this thing off this week. These are the kind of the bigger earnings reports coming out this week. So Go ahead, screenshot that, and let me know if you are when you're good to go. Just type in done when you got it done. And if you're not going to screenshot it, that's fine too. Perfect. Do any of these have some relevant Forex? I would assume yes in the banking sector. Um, Forex is definitely going to move mainly because of the next thing that we're going to talk about, Jerry. That's actually let's see. Did you already give out the bonus things from doing the donations last week? I didn't see a reply to my email. Ralph, email me. You should have gotten them. If you did not, here's my email. fl.com and just send me an email and I will check on it for you on Monday morning. I appreciate that, my friend. I appreciate that. Um, Thank you, sir. Now, let's take a look at the news and what's going on. So, I want to start with a couple of different articles, and it'll lead in some other things as well. So, the International Monetary Fund, basically, the president of the IMF has said that the US debt bubble is spiraling out of control. And we're over $36 trillion in debt at this point in time. And the problem that has occurred is because of the tariffs and the trade deals and poking the bear and doing things that have not been good on a global economic stage. What has happened is the the trade surplus that other countries used to get from us, they would take that money and then buy US debt with that. And then that money would go and fund the government, right? They would use that and others to buy US debt. Okay. Um Yeah, Jerry, amen. Amen to that one. That's hilarious. But the so because that we he this has happened this way, there are countries that are actively selling off US debt. You know, the 36 trillion dollars in US debt is more than all of Europe, all of Africa, all of South America, and all of the rest of North America and most of Asia combined. We have more debt than all of those countries combined. Now, the main sources of our debt is military spending and other social programs and military spending. Well, part of that goes to help like NATO and other countries and things like that. Like the US comes to the aid of countries all the time. So yes, I get the military spending part and things like that. But at the same time, this debt bubble from and where I think it really stems from, and here's the thing, and guys, I'm going to tell you this. When I go through this stuff here tonight, just know that I am not trying to pick on like a political party of any single type or any single kind. I'm simply here like I believe that politics is a lot like golf. If you're too far to the right, you're going to end up in the crap, and if you're too far to the left, you're going to end up in the crap. So you're better off being down the middle. Okay. And the not for years, SP, not for years, actually. We'll talk about that. I'll tell you exactly when that's happened. Um, but the thing, well, I'll tell you the times that it has, right? Is that the thing that where we see the biggest waste in government spending, one is lobbyists. Okay, let's just be real. Lobbyists are, if we could get rid of anything in this world, I would say lobbyists would be the best thing to get rid of. But the second thing that occurs is that you have these like they're called omnibus bills. This is how Congress votes on things. If you didn't know, this is a great learning lesson. I recently learned this from a former U.S. senator that I got to sit down with and speak to for a long, 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 long time. But basically, how it used to be was that if there was a bill to, let's say, increase military spending, they would vote singularly on that bill. Well, because the country was growing and we'll use that excuse because the country is growing. They didn't want to just vote on one single bill at a time. So they decided we can vote on a combined bill, but we can only have one vote. It's either all yes or all no. Well, what occurs, and this is how it occurs, is that if let's say there was a bill out there that said, hey, to build data centers for AI, we can go supersede all zoning laws. So if we see a neighborhood where a good data center would fit, we're just going to build it in the middle of that neighborhood. Now, how many of you guys in here would want a data center in your neighborhood? Yes or no? Yeah, no, absolutely not. Well, did you know that as part of one of the last big bills passed, that was in there? That's an actual that's law now, right? It's 100% law now. And so what occurs is that goes in there, but then they say, hey, we want to increase spending for our military, and we want to increase Social Security for seniors, and we want to increase Medicare and Medicaid. And they put that stuff in there. So now if I don't vote yes to that bill, then my opposition, when I'm up for re-election, can just simply attack me, right? They can just simply attack me, saying that I was against military spending, I was against expanding Medicare and Medicaid. And that's our political system as it is right this minute. Common sense ain't common, is it? But the thing that occurred was these omnibus bills, and then like somebody introduces a program that's supposed to end in 2 years or 3 years, and it just continues on forever. And so instead of like cutting off the program, they just continue it on, and now it's like it just gets overinflated. And so basically, if every US citizen, to pay off our debt, every US citizen would need to write the government a check of $100,000. Isn't that crazy? Isn't that crazy? So, there's been issue though with all of this debt, because the way trade used to work prior to, I'm going to go back to the President Obama's administration, or you can even go Clinton or Bush. It doesn't matter. Everybody since FDR to President Obama, the way trade worked was we would have a trade deficit with a country, right? We would purposefully have less, we would have a deficit with the country. So they would make more money off of us than we would make off of them. But that deficit also, there was an agreement that agreement was they would buy US debt, X number of dollars of US debt every single year. And that's what occurred for a long time. Then during COVID and under Trump's first presidency, they restructured the China trade deal and restructured NAFTA, and some of that stuff just kind of fell away. And then in like 2023, when there was more issues between China and the US, and then really heavily in 2024 and 2025, when President Trump became President-elect Trump again, we saw that China began selling off US debt in massives. Prior to the year before, let's call it November 2023, they had $1.6 trillion worth of US debt. And now they are, sorry, yeah, 1.6 trillion. And now they have 870 billion. The last time I touched on this number, which was back in June, they had 970 billion. So they've sold off $100 billion of US debt, which redeeming that debt, the US has to pay it, right? And then we need to go sell our debt. Well, there's only two ways to really solve this problem, right? This $36 trillion problem. One is, how do I put it? One would be like increasing taxes. Okay. Now, the other would be cutting social programs. And if you cut social programs, and I mean all, like the majority, I'm talking everything from TRICARE, which is healthcare for our military, would be on the table, to Medicare, Medicaid, and government assistance and food assistance and stuff like that would all be on the table. And cutting those programs, I think you would have a lot of civil unrest and a massive, massive issue in with the citizens. Increasing taxes can happen through tariffs, and that's what we seem to be doing. And so that could happen. Also, repricing gold, which hasn't been repriced since 1972. Right. So we would have about $2 trillion worth of gold in the US reserves, and then we would reprice gold. But what that signals is that gold becomes more valuable than the dollar, because the dollar is what's supposed to be hold the value. But we're saying now, no, we need to revalue gold so we can have more dollars. And so it sends a bad signal. Right. So we have this massive issue, and we're coming, it's all coming to a head, and we'll see how it gets dealt with in the coming weeks and months. But it's a debt bubble that we need to be paying attention to. Right. So this goes into kind of what I was telling you guys just a second ago about central banks. You have even Japan and Europe looking to sell. China, Japan, UK, and Canada have started quietly offloading treasury bonds. Repeat that just for the people in the back. China, Japan, UK, and Canada have quietly started offloading U.S. Treasury bonds. That ain't a good thing, my friends. And then China selling off U.S. debt, right? We have article on that. And so all that leads to, where do we put our money? Right? Where do we put our money? Jim, I love it. Jim said, I have a trade deficit with everyone. Amazon, gas stations, car dealers. They never buy anything from me. Amen. What does that mean about treasury bonds? Well, that means that treasury bonds aren't the safety that everybody thinks that they are. Like, first of all, that's one of my personal professional gripes, that they're really not. Because here's the thing: if I own debt on, let's say I owned, I don't know, let's say I owned your mortgage, Jim or Jerry, it doesn't matter, just somebody, pretend I own your mortgage, and I own your mortgage at 9%. Well, is there any incentive for me to just say, hey, you want to refinance this at 3% just cuz? Hell no. So imagine you own US debt at 5, 6, 7%, and now you want people to buy more of that debt at 1, 2, and 3%. It's not going to do well. So the question becomes, where do we put our money? Well, the first place I will tell you for me is gold. I'm going to say, Jerry, I would absolutely do that, especially depending on what you want to do. And we'll talk more about that, right? Let's see. Yeah, Jim, that actually is true. I'll read that comment in a second, but I want to go into this really quickly. Where would I put my money right now? Is gold, honestly. I think gold is one of those assets that I will tell you, I think it's going to be probably 22% higher in the next 18 months. Right? Gold and silver, yes. And now I will tell you, my silver trade paid off a whole hell of a lot this year, and it's probably going to pay off more. And I'll show why here in a second. Okay. So gold, 22% higher. Well, if we do the math, let's go 4067 times 1.22. We're talking $5,000 gold prices. Okay. $5,000 gold prices. Now, how would I invest in it? I'll talk about that here in just a second. But I absolutely think gold will hit $5,000. Absolutely, without a shadow of a doubt. I absolutely believe that, because in uncertain times, people put their money in the safest areas possible, which partly is gold. Now, the other thing, we had 90 trillion or 90 trillion dollars worth of gold found in Africa, 125 billion dollars found in Saudi Arabia, or 90 billion, 125 billion found in Saudi Arabia, and then like 200 billion dollars in South America as well. So we have a lot of gold all around the world right now, but gold is a very, it is a good asset to own, and it is a protection. Now, there's two ways you could invest in it. You could use like an ETF, like the GLD, or some sort of other ETF if you wanted to. You could use futures. Now, if you're going to use futures, you would buy, if as long as you had like 18,000 plus dollars in a your brokerage account with Trade-of-8, if that's who you're using, you could hold gold overnight, right? And if you would have went from like the last like dot here on gold to where we are today, I mean, it gets ridiculous. I'm not gonna lie to you. I'll show it, but I think it's like 60 grand or something like that, or 55 grand. Yes, $58,190 from that. Okay. $58,190 from just that last dot on Hedge Fund Trender. And I think it's still going to continue to rally. I would buy any dips in it, things like that. Now, if you're looking at GLD, I think GLD is a great option. $369.12, simple buy, easy buy. Now you're riddled with some gaps in here, right down at 318, and then you had a gap right here at 339, and then a gap here at 348, then a gap here at 358. We'll see if those gaps fill, but I don't think holding gold for a long time is not going to be a problem. I also think silver, right? So if we look at silver, and you could hold silver. You could also hold XAU and XAG USD if your Forex broker allows it. You have futures, you have cash markets, you have, the XAG, you have all sorts of ways that you can buy silver. If we look at silver futures, right? And I go here to silver futures, and I'm just going to go to the Decembers. December, we were at $48 and $380, and gold is at around $4,000. Well, guys, one of the things, and here's where my big trade has come one of my big trades has come this year. Back in February, the price of silver was $34 an ounce. And in February, I told people in there that it is way out of balance. You see, silver, for the entire history of the market, basically, silver has basically been 6 ounces of silver equals 1 ounce of gold. Well, we were at 27 ounces of silver was equaling 1 ounce of gold. And so that was a trade I've been holding on to for some time. And it just, finally took off and did really well. And now we're sitting at $48.32 while gold is at $4,000. Well, if we look at that, so if we go 48.33, divide that by 400, right, we're looking at times 100. It's about 1.2x the 1.2% of it, right? So we know this still has a ways to go. And if gold's going to rise 22%, silver will as well. And so silver could be a better play for you in however you want to do it, right? I don't personally, I don't like, I think owning silver, the SLD, SLV, what am I thinking of? Sorry, right? SLV, great option to own, right? So if you look at GLD and SLV, right? GLD was 345 bucks. Oh, 1 second. I need to close that. And I need to find this. So 345 divided by 45. We're at about 7 ounces of silver equals 1 ounce of gold. So, a 10% rise in silver would take us to where we want to go. So that's a area. Oh, physical is fine too. Physical is fine as well, Dennis. I got some right myself. Okay, so physical or this is fine. The indice is fine as well. It's gonna move the same. It is what it is. Um, so that's one of the things that we talked about. Any questions around there? Anything like that? MGC is micro futures. You only need $1,800 to hold gold overnight in micro futures. So that could be a great option for you as well. Any questions about what we just talked about before we start getting into more stocks and options and other trade ideas as well? No? Yes? All right. Good to go. So let's look at some of our trades that we have discussed. Let's see. What's my take on penny stocks? I'll be honest, I don't trade them. I'll tell you why. So just being in the industry and meeting individuals, I know actual people, 7 ounces to 1 ounce, right? So I know people that do the promotion on them, and I know how it works. And I don't ever want to I don't want to risk my money that way, and I would never risk a client's money, and I'd never tell anybody to risk their money that way. So we'll definitely look at Coinbase. We'll look at a few others here. I'm gonna go through a few because I think because of the fall from Friday, we have some buying opportunity. Here, let me go ahead and say this really quickly as well. ES and NQ, I think, are buying opportunities. Right. Absolutely. Without shadow of doubt, I think we're going to get a lot of recovery here, especially after that, the tweets and all of that stuff. So I think in a ES and NQ buying opportunities, probably could make a substantial little bit of change there, for sure. I think that let's go and take a look at Coinbase really quickly. So Coinbase, we filled the gap, which I love. And then we have pushed down. So one of the things with Coinbase is that, they're going to follow Bitcoin heavily. They're also going to follow Circle heavily. So because they're 50% of Circle's earnings goes to Coinbase, and so that's looked at as a great volume play. I still think there's a little bit of downside risk and downside opportunity in Coinbase. You're still, selling energy is still in control. We don't have a blue dot. Well, we did have a blue dot. It bought up, and then the market has pulled back on the daily here. I'm also going to add on Tyson's Fibonacci tool. There we go. So we did get the bearish push down to the retracement level that we should be expecting to get to. I think we have a small gap right in here at the 350 area. So if it fell another $7 to $10, I'd be okay with buying it there. But I would not just buy it immediately. Bitcoin recovered 5 to 10% over the weekend. Yep, that's why I think there's a big recovery coming, this Monday. I do think there'll be a big recovery Monday. Tuesday, we get a vote. We'll see if Congress comes back or, if they need a little extra vacation days. But even then, guys, I'll just be real with you. There is a even if they get things approved, remember, it's a temporary funding solution just till November. We could be all back into this back in November. So just watch what gets approved, right? Equity futures are up 1%. There you go. Look at that, William. I'm a genius and I didn't even know it. No, I'm Nostradamus for this one, and I'm not gonna be Nostradamus. Yeah, this is Bitcoin. This is Bitcoin right now. Bitcoin is recovering. It did fall from its high of 125 down to 106 and pulled back up over the last 2 days to about 115 is where we're sitting right now in Bitcoin. Um, One of the companies I constantly tell people that they should be looking into, ARX Innovation ETF. This is based with Tesla and Bitcoin and all of that. Look, if you're looking for a good buying opportunity, ARKK, I think if we get this thing down to 84 or 85, I think go buy it personally. All right. That's what I would do. That's what I would do, I say. If you get down to 84, 85, that'd be great for it to get back down to that level. And then we could have potentially some buying opportunity. Obviously, you would want market energy showing us that buying energy, and we would want a blue dot, right? I'm not going to buy this thing just to buy it. I'm going to wait for the next blue dot before I buy that. Okay. And that's ARKK. Let's take a look at Lululemon. This one had a pullback as well. Obviously, anything tariff related is going to cause this to pull back. So this one actually gave us a good buying opportunity, $167.51. I like it to fill to 198.64. Had this whole thing not happen on Friday, I think we would have shot back up. But again, wait for market energy to give us that buying opportunity, and then take that buying opportunity at that point. Okay. Market energy and a blue dot from HFT is what I'm looking for. And the recovery on it, even on the Fib from Tyson, is 189. So 198 is not out of the question just to fill that gap, especially from 189. The next big gap is taking it to 328. That's where we're going to see some opportunity. So UNH, United Healthcare, we saw our first gap filled, my friends. So I not going to say I told you so, but I damn sure did tell you so, that back in here, buy United Healthcare, and that would have been a hell of a trade. We filled our first gap. Of course, we're going to pull back. We pulled back right to this gap area. Do I think we push? I think we do push down to 322, 323, and that will be your next buying opportunity. Do I have anybody in here that took advantage of UNH at all? Yes or no? Duran, fantastic. Deborah, yeah, you'll be okay. Don't worry, because the long term on this, long term price point is 581. 581. So we still have $230 from this point, right? And I'm holding on to it until we hit there. I'll tell you that right now. Holding on to it until we get there, because just some good opportunity in it. We also we've talked about Disney in the past. We talked about Disney and Datney. Bad dad joke there, and I'm not a dad yet, but just practicing for one of these days. But Disney, right? We have a level of support and resistance that we just hit where this is. I do think Disney will continue to push down. 106 is your first gap, but 93 is the next. I will tell you, I'm okay. This is it. Let me just say it like this. If you're building like a stock position into this and you're building ownership into it, buying anywhere in between here, 106 to 93, you'll get paid off. Absolutely will. Okay. Now, Disney's going to have some debt issues. They're going to have some bunch of little things with ESPN, and now they own all of Hulu and Disney Plus, and but they have, Star Wars franchise expanding. They have Marvel coming back. They have all of the right moves are being made, and there's the right setups. And I don't buy for tomorrow. I'm not buying today for tomorrow. I'm buying today for a week from now, kind of deal. Right. So I'm looking at Disney as a longer term investment. So anything 106 to 93, I see as a clear cut buying opportunity. Does everybody understand that? Yes or no? So I need to add this to the list. Let's go DIS. We talked about it on 10, 12, 25. The price of it now is 109.19. And weight by 106 through 93. That's what we're gonna put. Let's check out Amazon. Robert said my optics are terrible. Robert, what do you mean by that? Like my screen is bad? Can everybody see my screen? Yes or no? Okay, everybody else is good. Need to be full screen. I am full. Jerry and Robert, what it may be is you might just need to like expand your stuff out. Okay. You might need to just expand your window out because I'm using a 4K monitor. It's like sometimes if you're in the zoom window, it'll say you may only be looking at like 70% zoom, like of my screen. So you have to change it to 100% and you should be able to see it. But everybody can see the fonts and all that, like price points and all that. Yeah, it says good. Oh, Cynthia says if you have captions on, it makes it smaller. That may be the issue for you, Robert, too. So maybe turn captions off, just in case. But 106 to 93 is where we're looking there. Let's go now to Amazon. AMZN. I looked at Amazon and we had talked about waiting on Amazon, and we did wait on Amazon, and I'm glad we waited on Amazon because it has tanked. So I'm looking at Amazon at this point as we may have that buy, right? We may have that buy coming up right now. What we want, market energy, to start leaving the selling side and go into the buying side. I like it at this price point that we're at. 216.37. I'm okay with that. We do have a gap down to 194. So we're not in the clear, oh man, we want to buy it. This is going to be, again, build a position. But if we hold support and resistance, I'm okay with picking up a few shares at this price. Because at worst case scenario, we come back from where we are up 15, 20 bucks, right? So if you wanted to like look for a short-term call option up to 223 or 230, you should be fine with that. Especially come tomorrow when all of this. If you're looking long-term for like where you're going to build your position to, right here at like 195. So anything 216 to 195, clear cut buys. Okay. Wait. 216 to 195, clear cut buys. However, can buy now, looking for 230 price target. So we'll go 216.37 and I'm going to go buy there and I will update that to there. Now, the other way you can trade Amazon is something like AMZU. Now, this is more risky. Let me repeat that, more risky. I'll say it one more time for those of you guys that weren't listening. This is more risk, but it has a higher return. AMZU is currently $33.53. So you could buy AMZU. If it fell $4, you're not going to be out a ton, but this is a 2x ETF for the upside. So you want to, if this rallies up, you're going to make a decent amount of money here. So that's AMZU. And I'm looking at a potential buying opportunity where we are right now. if we get a blue dot, right? Buy if we get a blue dot is what I'm looking for. Let's go Nvidia. Nvidia, we saw a big pullback there. Again, China tariffs. It's been this big hit. This is where this is the pullback exactly where the Fib said it would pull back to. So I don't see, as long as we get, some more good news on China, in Nvidia, I think is a clear-cut winner from that. I think AI is far from over. We're literally, I just watched a 60 minutes expose this our I don't know, 60 minutes. No, that's on now. CBS Sunday Morning had a great expose on AI fighter jets. They have an F-16 that has outperformed human fighters. They now have the goal is to have 100 to 150,000 fighter jets for the US military that are all AI based. Basically, some will have pilots, some will have non-pilots. And literally you just put in this cartridge and the AI fly it for you. The ones with pilots, they'll be able to take over and go. The ones without pilots, you won't. One of the companies that take advantage of this is Archer Aviation. This company has like a military contract for this, right? I talked about Archer back in here back in like May, I think it was actually. We were looking and it was May of 2025. It shot up. We took some profits, shot up, but we're up here now. We've just had that pullback. This is it's only $11.96. I'm gonna call this a buy. This is one of those that's like it's a long-term hold buy. ARCH. Wait, AR. Oh no, ACHR. ACHR. My goodness. CHR. That sometimes that Lex Dixia gets me, guys. 10, 12, 25. 11.97, and we'll call that a buy. Let's look at OKLO. OKLO, we still saw this thing shoot all the way up to 160. Again, we got our pullback that we wanted to. We talked about buying it. Some people bought it again. Some people have not. I think you just buy it and hold on to it. It's going nowhere, right? SMR, same thing. SMR is $39.24. I personally would buy this. All right. So I am officially buy on both of those. We're up $36.63 on OKLO since we called the buy, and $66 on UNH, and $1.24 on SMR since we called the buy. Just FYI. Nvidia waiting, Coinbase we're waiting. Let's go AppLovin for my good friend in here, AppLovin. I know we're still seeing the push down. This number 508 is still in play. We do have earnings November 5th, but 508 still in play here. That's the number that, if we hit that number, I think we will just bounce back and push back up. If we break below that number, that's where things get a little scary, but earnings will potentially be a lot better. So we see where this is going, potentially back down here to 545 before we get a pullback up to 670. And then that'll probably happen before earnings. And at that point, will hopefully ratchet a little bit higher up to 715, 730 area. Let's see. Let me try a few of these other. Let's take a look at SoFi. SoFi 2619. Look, I like SoFi. The only thing, there's a small gap there at 19 bucks. Could have come back and fill that gap. Absolutely. Where are we at kind of like Fibonacci wise? Hit a D extension. We blew through that D extension. 1, 2 left. We have a 5-0 pullback. So this could go to 35, 50, 31, 54. But we would want, again, blue dot and market energy kind of tying the two together. Okay. Like kind of tying the two together. Let's see. What would be good news from China? Well, it would be from, Truth Social, or President Trump, really. I don't know what those things are called. I don't know what do they call the thing that you send out on Truth Social? Is it a tweet? Is it a truthy? Is it a socially? Is it a some TS? I don't know what it's called. I don't know. So I'm just making up stuff at that point. But if you it's called a truth. Oh, it is a truth. Okay, gotcha. I've never been on it. I'm not a big social media person. I'll be real with you. Like I post photos of my dogs, golf courses. It's generally about all I post. Um and I stay off of Facebook as much as humanly possible. I do look at the marketplace because I find it interesting that what people will sell. And it's like I wouldn't want to attach my name to some of the things you guys are selling. But you know, if we see something from Truth Social, an update about that. Right now, President Trump is headed to uh, the Middle East to work on, kind of a ceasefire peace deal over in Gaza. And this is happening, right now. He's left. He's headed over to the Middle East for Tel Aviv. He's going to speak to Israel's parliament on Monday. And we will see what happens from that. Let's see. Jim, that's hilarious. Love it. Love it. Love it. Love it. So let's go with time. Let's do a couple others. So we looked at some futures, we looked at the NASDAQ, we looked at the ES, we looked at some stocks. Let's take a look at some Forex. Let's go US dollar. It's from our Forex folks. Dollar is on a rise. It's on a tear. It's rallying higher. That's, look, we don't have a lot of news that's affecting the dollar negatively. And when you got to remember, cash is a position. And when people hold more cash, the dollar rises. So when markets go down, dollars go up. When gold goes down, dollars go up because you're transacting back in cash. So I anticipate this to continue to push up, continue to push higher. No worries, no fear, no nothing out of that. There is one other piece of thing. ETH tax break. There was something here. Here you go. So this, I don't know. I wanted to share this with you guys. I have not, let me just say this. I have not gone through and really thought about what this means, but the US Treasury exempted Ethereum from the 15% corporate tax rate. Okay? From the 15% corporate tax rate. So that is it removes cost barriers for companies and things like that. So I don't know what that means. I have not looked into it very, very a ton, but it could mean a good, some opportunity there to buy some ETH. It was down at 35. We're sitting at 41 now. You could buy a fraction of it. if you are into crypto, do what you want to do with it, but totally up to you how you use that information. Okay. Newbie here does the blue dot HFT and allow you to set and walk away style of trading. Precious, no, not really. You can get alerts from it. There are ways to automate it. I just don't. But Precious, I'll also tell you, I don't use cruise control, so I like control of things for myself. CAD Swiss, let's look at her here, CHF. So CAD Swiss down again. If you're looking for the buy, we do starting to get, potentially should get across here that on market energy that will let us and give us insight to buying up on the CAD Swiss. So we shall see on that. A lot of this has to do with oil prices in Canada, as well as tariffs in Canada, housing issue in Canada, and banking issue in Canada as well. So that's where a lot of this is coming from. Until some of those, I think when Canada has a new prime minister and that forms a new government and will take control, I think it goes from there. Okay. Let's see. Is there anything else here? Don't believe so. So we're gonna wrap this one up. There's one more thing that I want to do. So look, this is what I'm gonna do before I have the webinar discussing it and things like that. I'd love these downturns and this uncertainty in the market does not have to mean, as well as what's happening with taxes, right? It does not have to mean that your retirement has to suffer ever. And it's something that I do. It's what I do professionally. It's what I do. It is my life's work, literally writing my dissertation about the tools that I'm going to share with you. There are some tools I have that will this is insane to say. They're giving a 50% bonus at deposit. So if you deposit it for hypothetical purposes, if you deposited $1 million, they would give you $500,000. If you deposit $100,000, they will give you $50,000. If you deposit $25,000, they'll give you $12,500 in your account. Then guaranteed no loss and guaranteed growth rate over a period of years. There are others that work a little better depending on age, that give you 30% return instantly and a 9.5% guarantee every single year. And I'd love to talk with you guys about those. It's simply this. I do no obligation meetings. We have a conversation. I give you the information. Then we have a conversation. Then you make a decision. And if you need more information to make your decision, great. And I'll tell you, what I do isn't right for everybody, right? And here's an example. This company is doing a 30% bonus and a guaranteed 9.5% return. This person, invests 30%, get the 30% bonus gives them $650,000, and every year they're making $47,500. So in 10 years, they're getting a $1.1 million guaranteed return. And you don't have to do 500,000. You be as low as 25, right? So what I want to do is this. I'm going to send you guys this link. This link will actually allow you to book time directly on my calendar. And so Jerry, some of those are required. Some are not. Okay. Some are not. That's what I was trying to allude to. Like the fund you want to be in, that has that requirement. The other stuff does not. So this is what I want to do, guys. There is a link for you. You can book time directly on my calendar at any point in time you want to. And if I can't make that time, I will have either Brent Birch or one of my other teammates be on the call with you in order to help you. The goal is to give you the information. What you do with it is all up to you. I'm not here to pressure you into doing one thing or the other. And if we go through things and you're set up perfectly, like I've done it maybe 5 times. I say, hey, stick with what you got. Don't change a thing. And anybody tells you to change a thing, they're after one thing, money for themselves, which I'm not here to gouge people out. Those people that I told that, hey, you're set up perfectly, they appreciated that so much that I've gotten referrals from them, even though we couldn't work together. And that's what I like to do. Is my goal is to help people with a level of honesty that you don't typically see in the financial services space, because most people are out for themselves. And so what I'd like to do, again, I'll send this link to you all again. This is a free appointment. Just book your time with me and we can talk any and everything that you would like to discuss. So if you have any questions at all, please, please, please reach on out. I appreciate you all. I will send you guys a couple of links as well. This is the Fib Mastery newsletter that we use, that Fib tool. Definitely the tweet. Definitely the tweet. We also have, this is for Hubert Centers starting up a webinar this week. I'm excited to be in that one. I'm going to be watching that one. Advanced Itchy. It's one of his favorite tools he ever used. I love that course. I love that webinar. I think it's one of the best tools that you guys can see. And then I'll be doing a webinar on Tuesday as well. Join me in that. Those are the 3 webinars. And thank you all for being here. I will see you guys in 7 days, my friend. And who knows what we'll be talking about then. Appreciate you all. Love y'all. And I will see you guys next in a webinar, probably this week. So have a good one. Thank you so much.